Forget the capital growth of the underlying value of the holdings, which typically is the largest element of, the largest contributor to the growth of that portfolio. You might not need to dip into that at all. So
just how rich they're richer, right? With making decisions like that, with having their stocks pay them without even taking any of the growth and allowing that to just
exactly. I mean, this is another thing that keep mentioning his name. Gary Stevenson was talking about. He's like, do you have any idea how much income, like insane amount of wealth can generate passively, and the amount of millions that a billionaire would earn without doing anything, just through that natural growth of dividends and interest. I think he's slightly, he seems to believe that nothing ever gets taxed, but obviously those dividends and interests will incur tax. The interest will be taxed as income. The dividends will be taxed as dividends at dividend tax rates. And anytime that asset is sold, or if there's any portfolio management going on, then capital gains could be triggered as well. And of course, you've got inheritance tax. Now, when he talks, he always uses royal figures as examples, and he's like, they don't get to pay inheritance tax because everything's in trust, which is true. And he obviously has a point that there's insanely rich people that don't pay enough tax, and he thinks that they should be taxed more. But I don't fully agree with everything he says, because he does try to manipulate his point by often being factually wrong about certain things. But he rage baits a little bit, like he whips up anger from people. Exactly, yeah.
Well, I mean, I don't believe that the more you earn anyway, the more tax you should pay because of that. It's because they're still paying a substantial amount of tax, which contributes to the system, I think. And just to tax someone more because they are capable of earning more, it sucks. It makes you not even want to earn more. It makes you work hard for that money as well. Like, some people put in so much more hours a week, so much more hours in their life. Some people make so much sacrifices in order to get to that money, and they just the tax rates people think they should be paying. I think is ridiculous. I think
certainly when someone has earned that and it's money that they've worked for, I think tax on that should be really low. Personally, I agree to a point that tax on wealth could be higher.
Capped though, that's what I think.
Yeah, capped for sure. But inherited wealth is dead assets, really, isn't it? And I've got no issue with that being taxed and put back into the economy, but we can then support more employers to grow businesses and create more jobs and that sort of stuff. I'm all for. How you actually go about doing that is very complicated, and
businesses are closing every day because they can't afford tax and VAT on their product. They can't even afford to pass on the VAT onto customers on certain things.
Well, I mean, it all comes. It comes back into our conversation earlier about everything in this country is getting more and more expensive. You can't keep squeezing customers.
This whole tariffs thing as well.
That's not helping. That's not helping. And I think our country has sadly become quite unfriendly towards businesses. Like. This might be a poor example, but on the news recently, I was watching this Sky News reporter sort of asking Nigel Farage some questions about how he's trying to dodge tax because he pays himself through his business. And it's like, well, you are also effectively demonising anybody that's ever set up a business to try and be more tax efficient. That is a good thing. To encourage people to start businesses, because that's how they employ people, which also, by the way, generates a huge amount of tax because you start paying income tax and corporation tax and national insurance
and everything. And that's why I think it just gets a bit greedy. Do you know what I mean?
We don't need to be hounding business owners and making them feel demonized for paying less tax when they're trying. Like, our economy is built on small businesses. And if we start to demonize that, then our economy is going to collapse.
So Tim, what assets are completely exempt from capital gains tax?
There's a fairly long list, to be fair, but the main ones that you or most people need to just be aware of is The interest you earn on, or the growth that you get on premium bonds, that's tax exempt. UK gilts, any growth on that is tax exempt. Your main property is exempt from capital gains tax.
Your main property, as in if you was to sell your main property?
Yeah, so your main residence that you live in, if you were to simply sell and buy somewhere else,
Yeah.
you would pay no capital gains tax on the sale of your main property.
Even if you didn't buy somewhere else?
Even if you didn't buy somewhere else, yes. Now, it can get a bit more complicated than that. And you might have a second property that, let's say you own a property that you lived in, and then you moved, you didn't sell the property. Let's say you rented it out.
Yeah.
And you moved to another property. But then a few years down the line, then you sold the property. It would not be your main residence at that time, but you can discount the time that you were living there.
Right.
So if you have second properties that you ever lived in, then you can pay reduced amounts of capital gains tax, potentially none at all, depending on how long you lived there. You can also discard home improvements you made. So if you spent a lot of money on the property and that was to sort of improve the property, then you can discount what you spent. So if you've got a second property and you're doing it up, or you're building an extension, make sure you keep all your receipts, because those can be discounted from the sale price. So when you're looking at your capital gains tax calculation and you've got a sale price deducted from your purchase price, you can also deduct all of those improvements that you spent as well.
Yeah.
So, it can be reduced via a number of ways.
Okay. And other things will be like the selling of your personal car will be capital gains tax free. Gifts that you give to, will be your partner, right? You can't just give gift to anybody and would it be capital gains tax free? Any gifts you give to anybody, or just your partner?
Just your spouse.
Okay, a spouse.
So you're going to be married. So that's again, we touched on it earlier about if you own an asset that you're looking to sell, then it's a good idea, if you're trying to be as tax efficient as possible and you trust your spouse, to gift them half.
Yeah.
Or you can just give them shares. Yeah, all of that is the spousal exemptions applicable, so there's no capital gains tax.
Okay, so also things like gifts to charities will be capital gains tax free.
Yeah.
Winnings from any betting, lotteries, or pools. And again, like specific investments like ISAs, legal tender, gold, silver.
Yeah.
What else? Is there anything else that would be capital gains tax free?
There probably are. I would say that's a fairly conclusive but not exhaustive list.
Okay.
Yeah, there's going to be a few other things.
That's enough for now.
Yeah. If you run a eBay selling company and you buy and sell used clothes, you don't pay capital gains tax on those items. You know, there's most things, to be fair, that you buy